You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. It is time once again for episode 2 of your bi-weekly option sojourn known as the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Reminding all of you newcomers out there, if you like what you hear, keep rating and reviewing. It really does help attract newcomers to the network. And there are a lot of them out there these days who are discovering these options things. Just look at the numbers we talked about for March, the highest volume month in the history of the business. January was the same. February was number 2. I mean, this quarter off the charts, more people trading options than ever before. They need a place to turn, so keep rating and reviewing. It really does help new folks find their way to a reliable source of info. And, of course, keep those questions and comments coming, too, particularly for a day like today. It's Mail Block Thursday. So you folks get to take the reins with your questions, your comments, your pearls of wisdom. And let's see who else we're hearing from on the old program today. First, let's go out to a quiet, a sleepy, nay, a tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management, a.k.a. the guy who's blowing up Twitter. Mr. Uncle Mike, welcome back to the program, sir.
Always excited to be here. Happy to be here on a Thursday, and it is an Uncle Mike kind of day today.
I think every day is an Uncle Mike type of day these days. All coming up, Uncle Mike, as we keep on rolling. And when we got all this Uncle Mike, we got all this optimism, all this green on the screen, we have to counterbalance it a little bit. You can't have too much light side of the force. You got to have a little bit of the dark side, too. So we're going back out. It's been a little while, but I think we could find it going back out to the dark, imposing fortress-like structure known as the GIOVINAZZI compound there on the shores of Maine. Waves crashing in, thunder raining down from the heavens. That's where we find the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the program. Do you remember how we do this thing, sir?
I figured out how about the mute button today, so that's good. But I do remember. It's coming back to me. It's coming back to me.
Good. It's only took you about the better part of a decade to master the mute button. Let's see what new audio advances we could make in the coming decade as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. It's that time of the show, time to break down what the heck is lighting up our screens. And as Uncle Mike alluded to, yet another Uncle Mike type of day. Most of the major indices pretty much in the green yet again. You know, it seems like we broke through that 4,000 level in the SPX and kind of haven't really looked back since then. There's been a little bit of a pause here or there, maybe the NASDAQ taking a pause at the Dow, but the S&P has maintained itself above that 4,000 level, and it still is today, almost 100 points beyond it now, up about 1/3% today. Dow vacillating with unch to down slightly, so it wasn't the green, just ticked red ever so slightly. So that might break my Uncle Mike day, but pretty much for the most part, it's still green on the screen. And NASDAQ up nearly a full percentage point. So NASDAQ feeling its oats today. Most of the major vol products, even though they've had a lot of moves of late, since our show on Monday, actually kind of mixed. VIX has had one of the larger moves. It was at about 17.20 coming into showtime. Puts it down nearly a full point, about 0.8 of a point. It got down as low, listeners. Hit a 16 double. I'll have to go check the records, Mr. Rock Lobster, because you were on the last Vol Views a few weeks ago before the Good Friday holiday there. I don't think any of us had a 16 handle for our crystal ball, let alone a 17 handle. But we'll see. We all know the vol gods are capricious. And by the time we get to the crystal ball tomorrow, we could be at a 26 or a 12. Who knows? Vol gods are demanding masters out there. VVIX, the vol of vol, has broken through that 100 handle, got a wee bit below it of late. Now it's kind of back close to it again at about a 98.5. That puts it down at about exactly a 1.5. We were at about exactly 100 on our last show. So VVIX has come in a little bit since our last show. VXX, a product that just seems to be racing inexorably towards the 10 handle, aka the reverse split. Getting closer. It's at about 1040 when we kicked off the show. That's down about a third of a point or so from our last show. And VolQ was at about 21.25 to start the show. That puts it almost exactly unch. So NASDAQ vol hasn't budged since our last show. So a lot to unpack. The rockingest of lobsters hasn't been here in a while. We have seen some movement out there in the land of vol. Mr. Rock Lobster, what were you thinking when we saw that 16 handle in VIX land yesterday, sir?
We actually had a print this morning too. 16,
yes,
I believe.
Yes, that is true.
It was there for a brief moment in time, and then got bid back up. So it is. Even Volman made a brief appearance back on Twitter. He only comes out every so often, but. So here's the thing. It's hard as it is to believe. I was trying to come up with some fun figures for our listeners today. And if you had to guess, what is the 1 year average volatility for the S&P 500 right now? If you had to do 360-day vol, what would it be for the S&P 500?
And I always dive in bravely and guess these things first. Let's have Uncle Mike guess. He never guesses. Uncle Mike, you play the guessing game today.
Based on the fact that we had such a high vol before over the last 360 days, I will say 31.
Hey, pretty good guess. Mr. Longo, you want to take a stab at it? But I already gave him a big hint.
You kind of already said it. I was thinking a little bit lower. I was going to go like a 28.5.
Oh my gosh, 29.86. Your ball prognostication abilities are now for some fun. Okay, what was the low during the Trump era? 1 year volatility low for the 360-day vol in the Remember when our single digit Trump president stuff?
360. I know we got into a 9 handle. I think we flirted briefly with the 8 handle, but I don't know if you're talking annualized vol. Is what you're talking about?
And 1 year. So if you go, if you 1 year, 360-day realized vol for the SPX.
That couldn't
781.
Was it? Did it hit that? Jesus.
7.81. That's a 1 year average, by the way. 1 year.
I remember that year, 2017. It was the death of all vol. It was amazing.
Yeah.
It was no vol to talk about. So it was the polar opposite of 2020 and now 2021 in every respect, which was hilarious because every single person on the network, including myself, I put myself in that camp, said the one thing we can all expect when Trump walks into office. What did everyone say? Trump is not a single-digit VIX president. What happened? Trump was a single-digit VIX president.
He was. And then and then what? Oh, then the Chinese tariffs started, and we got the impeachment, and then we got COVID. Like, holy shit, Taki. He had some pretty big moves as president. A couple of good trips below 3,000 to 2,500. And then, but he did, you will say though, the Dow almost doubled under his presidency, I think. Hard to believe that, but true. Not bad taking it from a high to a new high. But that being said, I think the Fed has helped a little bit on that. But it doesn't matter because that's where we are. So we have VIX at 1711. SPX, I think, is all-time high again today, but we'll save that for Mr. TOSAW. And vol is the vol futures. Again, we still have that pretty big overhang. It's starting to get like a very normal contango, very high, for vol for those back month futures as the front month continues to dive. And I don't think volatility and SPX options now going out to the 21st. Vols are at the money are only 11%, 11.5%, which I don't think is very high. So all the short-term vols are now, the 20-day vols now down to 12%. So again, we saw that before, but I don't think we had in January, February when Don was talking about that huge risk premium. All of these really sexy stocks that were flying off the shelf, like the SPACs and pretty much any technology stock, all of those are heading down into Palookaville. I have a couple positions in some of them because the vol is so low, but I like So this is a stock that had realized vol is 170% over the last 30 days. It's moved 2 cents today, 2 cents close to close. So if that tells you anything, the market is cooling faster than it's cooling faster than an ice cube in an igloo. That's all I can say at this point. So I'm leaning a little short. Obviously the 20 puts worked out this time, 21 puts worked out, and looking at more intrinsic value plays for VIX as we go lower. I'm staying away from VXX and UVXY just because I'm expecting a split pretty soon, and I just don't want to deal with the funky, split contracts when it's all over. So just making life easy. But I'll tell you, the vol's getting down there. No question about it.
Yeah, we are getting down there. I know Mr. Rhodes is on the VolView show over a month ago now saying he was already getting out of VXX and UVXY because he thought the split was coming back then. We have moved even more perilously close to the fire there. The 10 handle, again, listeners, usually the level in the VXX land where they start talking about reverse splits, and we're getting pretty perilously close to it out there. We're also perilously close to Uncle Mike, breaking down his Uncle Mike type of day. So let's get to it. Uncle Mike, sir, what is lighting up your tape today, sir?
Never before in the history of the entire stock market has there ever been a better time to sell than today. New all-time highs today in the S&P 500, so that's always exciting. And to quote my good friends Axl Rose,
is it still exciting when it's happened almost every day for the better part of the last year? Is it still exciting?
Yes, it is exciting. What's that to be excited about? But to quote my good friends Bob Dylan and Axl Rose, who have no clue on who on earth I am, we're not knocking on heaven's door, but we are knocking on 4100's door in the SPX. So I thought we might cross it about an hour or maybe about a half hour, 40 minutes ago, but couldn't quite pull the trigger on getting through the 4100 mark. But we're still about 6 points away in the SPX as I look at this. So we could be heading to another key number. So that's something that's always exciting to watch for sure. And it's been a pretty quick run from 4,000 to 4,100. And we'll see if it's a quick run from 4,100 to 4,200, or it might be a quick run from 4,200 to 3,100. You never know. But with that being said, what are some things that are lighting up my tape today? 10-year note yields are definitely stabilizing. And so it was weird over the course of the last couple months when we had a sell-off in bonds, and it was kind of a concerning thing for stocks. We had that correlation between tech stocks and bond yields. And so that appears to be it appears that we're stable somewhat. And if you look at it, what I think is ironic today is that we do have an uptick in the value of the 10-year going into today or during the trading day today. And so with that, we definitely have a rally. And so I think that just we're getting less fearfulness, and with the stabilization of the 10-year, I think that's helping markets. Financials are flat on the day, in that if interest rates are going lower, sometimes that can harm financials. And I'm referring to XLF, and by lower, I'm talking 5 cents. It's down minimally, but what I do think is interesting is the fact that when we have this to where bonds go up and tech stocks are going up at the same time, and by tech I'm referring to XLK, the sector ETF that tracks technology stocks. That's having a pretty decent day on the day-to-day, and I would say that that's kind of leading the market as of now. So we have that happening. And so on here, the other thing that's happening today, we have this, what do you call it? It's itty bitty coins, Bitcoin. So Bitcoin just got pummeled yesterday, and looking at today, it looks like it's recovering somewhat. But Bitcoin seems to be, we're still below the 60,000 mark with it. So that's definitely playing a factor into the marketplace. But what's interesting as I'm looking at this today is the fact that we have Bitcoin, gold, and silver all up on the day. And a lot of times there's just the talk out there that Bitcoin people are just gold people that want something different to do. And today that's definitely not the case. So because we're definitely having upticks in gold, silver, and Bitcoin. So something else with which I'm keeping an eye on as well. But I think the main thing with which I'm keeping an eye on, and I think that's the most important thing for us to look at least in the near term, is for sure the 4,100 level on the SPX. We are 5.5 points away from that right now, at least in looking at the SPX. So we're very close to it. And key numbers are big, folks. I think that's something that's very important. And that's one of the main things with which I am looking at that's lighting up my tape at this point in time.
Thank you for that, Uncle Mike. Let's see what stuff is lighting up the tape out there in the rest of the options market. And a whole bunch of stuff is lighting up the tape in VIX land right now. It seems like this threatening the 17 handle, hitting the 16 handle ever so briefly has just ignited a frenzy of paper out there. And usually of late, we're talking about VIX right now. It's at a couple of 100,000, maybe 300, 400,000 if it's really lighting things up, because the ADV has already ticked down is threatening to break 500,000 in the wrong direction, 504,000 right now. But today's going to change that because we already have 928,000 contracts on the tape right now in VIX land. I had to go see what the heck is going up out there. It looks like the 2540 vertical in July is on fire today, has traded about 200,000 times, or 209,000 versus 197,000 times, respectively. So there you go. There's your 400,000 extra contracts out there right now. So a lot of paper on that vertical. That's an interesting one. Mr. Rock Lobster, it's so sizable. I'm sure that's come across your screen. What are your thoughts on this 2540 vertical? You like those strikes in VIX land in July, sir?
Well, the price is right. What are they paying? $2. That feels like it's not a 50-cent trade, that's for sure. Because they're spending too much money on
50 cents times 4, then I guess you can call it that.
Yes, I get all this. So instead of 800,000 contracts, he's only buying 200,000 contracts. So
he can't afford as many.
Yeah, well, I guess where's the at the money is about 23 in July. So it is I think you have VIX trading at a 1-year low. It's going to kind of bring in the bottom fishers and stuff like that and see what happens. So no real surprise there, to be honest, as far as VIX goes.
So what you're saying is that was the GIOVINAZZI family fund that put that on. That's what I wanted confirmation of. That's all I wanted to know. All right, cool.
Yeah, and that's what's funny is about that, you can buy July 20 put for $2 and, and VIX is trading 17. So there's still some pretty, at least the way I read future premium, it's still pretty juicy out there. So there's a lot of interesting stuff to do. I put on a few trades today and, just trying to take advantage of the intrinsic and the fact that VIX can trade to like a lower number at this point. Like you've got lower realized vol and the market's doing good stuff and doesn't seem to matter what's going on in the White House. The market just goes up. So that's what it is. So you might as well just enjoy the ride. So
this guy's certainly enjoying the ride. You like that spread, listeners? July 25.40 for $2 even. Are you a big buyer of that? Would you rather be selling that? What are your thoughts on that spread? Size print in VIXland today. SPY doing decent paper, but nothing on the order of outside the extreme like VIX is right now. SPY closing in on 2 million contracts, about 1.85 million. That's about what you'd expect for SPY. Actually, maybe a little bit light for right now because their ADV is about 4.4 million. The S, similar story, about 600K. The ADV, 1.2 million, so they're right about half of their daily volume as well. The Q, 644,000. The ADV, 1.3 million out there. And IWM kind of lagging, only 306,000 contracts on the tape, even though that is close to half of their ADV as well. Their ADV has come in a little bit of late as well. Moving on out to the single names, what you folks are lighting it up with out there. A newcomer fighting its way into the top 10 today. New name maybe on the meme scene. This is SOS Limited. This is an ADR out of China. This is a blockchain and Ethereum mining company out of China. You know, when you got blockchain and Ethereum mining, you're already a recipe for some love. It's a cheap name. It's $5.44 right now, off 33 cents or nearly 6%. And also, this is the name that's been heavily shorted. The short sellers have their claws out for this one. So you got kind of the perfect recipe for the Reddit kids to bid this one up. You got crypto and blockchain, you got a cheap underlying, and you got heavy short interest. So that seems to be driving a bit of a battle in the stock as well as fueling a whole bunch of options paper. This thing just a few sessions ago was trading 448. It got up as high as 608 very briefly yesterday. And then it's kind of come off again today. Got down to 518 today. It's been bouncing around 520 up to 540 and change. So a bit of a back and forth out there. Reddit kids versus the short sellers. Oh, here we go. That battle once again. But it's good for 205,000 contracts in this name that we've never seen before in the top 10 ever. So that's where we are here in 2021 listeners. Number 9, kind of the oldest of old school names, what the Rock Lobster used to call telephone when he first walked on the floor back in the Flintstone days. That's good for, by the way, SOS breaking into the top 5, 205, top 10, 205,000 contracts. That isn't that much. That's usually at least $250,000 for a pretty active day. Telephone at 206,000. That's AT&T for anyone born past, 1985. Amazon, number 8, I should say. Number 3 from the bottom. 212,000 contracts. Number 7, AMD. Continues to fight its way into the top 10 day after day. 217,000 contracts on the tape. Still pretty light. Already at number 6, and we're just at close to 250,000, 242,000. That gets us to Microsoft. They've kind of been fighting their way pretty steadily into the top 10 again of late, which is, they kind of fell off for a while, but now they're back. It hasn't fallen off, though, is number 5, Palantir. 246,000 contracts. Also kind of light volume for them. This is pretty light overall until we get to the top of our 10 here. That's where we get a little bit more paper. But the middle here, kind of light. Number 4, Facebook. We're already up to number 4, still only 261,000 contracts. Outside of VIX, not a heck of a lot lighting it up out there today, listeners, from a volume perspective. Facebook, number 4, 261,000. Number 3, NEO. A paltry 266,000. NEO sneezes and they do that much paper. But today, that's all they got, 266,000. But it's good enough for number 3. Again, kind of showing you how light things are out there. We jump up a little bit more to number 2. Tesla doing 554,000. That would be a lot for any of these other names. Not a heck of a lot for Tesla out there. By the way, listen to OPR yesterday. Brian had the temerity to go short Tesla in his trade. Tell us what you think about it. Are you appalled that he would dare short the mighty Tesla? It's not quite what you think. Go check out the spread. You'll see for yourself. And number 1, the big dog, back with some gusto. Looks like it took a little bit of volume from each of these little meme kids. Said, hey, get the heck out of my yard. This is my yard here. 1.64 million contracts in Apple right now. That's the most we've seen them put up at this time in quite some time, actually. And they're moving a bit today, up about 1.6%, or about 2 handles threatening the 130 level. That's a decent move for them of late, and that's a heck of a lot of options paper. Lately, they've been struggling to break 1 million by this time in the show. So it seems like the rest of the top 10 ceding a little bit of paper to the king, and the king sitting firmly on his throne out there. Terms of earnings, not a heck of a lot. We're kind of winding down the season unless you're really excited about WD-40 popping off after the Bell and Levi's today. Then, hey, we got it for you. But outside of that, not a heck of a lot. You can check out how the season has broken down so far over there. TheOptionsInsider.com. You can also check out all the archived earnings move and earnings move results reports there as well. Spoiler alert, the season was kind of a bad one for premium buyers yet again, averaging out to about 77% return on your dollar. So if you bought a basket of all the earnings out there, you made back 77 cents for every dollar out there, with some bad weeks out there. Week 1, 56%. Week 2 has been adjusted now. It's up to 60%. It was even worse before that. Week 3 and week 4, 95% and 99%. So the best hope you had as a premium buyer. Then it kind of falls off again. Week 5, 73%. Week 6, 52%. That was the worst of them all. And then it averages out to about 77%. So again, it seemed like coming in, maybe this was the cycle. This was the period where earnings vol would finally start to outperform. But alas, the answer is no. If you want to peek ahead, we can peek ahead really quickly. There still are some names popping off next week that you may want to look at, including one that was getting involved in that meme conversation. We had it in our show for a while. It wasn't even a meme stock then. It was just GameStop versus Bed Bath & Beyond. We had that death poll. Little did we know what GameStop would become. But the other half of that, Bed Bath & Beyond, they're popping off next week, 14th. They are pricing in $4.27. In the past, they moved $4.10. They were trading at $28.31 as of this report. Then we've got, it comes right back around again. It isn't that far away that we do the whole dance again, because we've got some names coming up here again. We got JP Morgan on the 14th before the bell. That's 154.93 is where they were trading. They were pricing in $4.54 in the past. Get this, listeners, they moved $2.80. So a little bit of extra juice in JP Morgan land. Bank of America out there as well. They're at $40 even. They were pricing in $1.24 in the past. They moved to $1.12. And we got little old Peps, another firm right down the street here, at a 143.5. They're pricing in $2.65 in the past. They've moved $2.54. All right, let's keep on rolling. It is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, where we figure out what the heck is going on out there from an overall unusual activity perspective. Got some newcomers popping off here in the Eye of Sauron. Let's see what our Eye of Sauron has fixed its gaze upon today. Again, like we mentioned, outside of that big VIX print, kind of a weird scattershot day. You got paper and Apple, paper and VIX, everything else kind of meager. So let's see what our Eye of Sauron found. It's days like today where he kind of earns his whatever we feed him. I don't know what we feed the Eye of Sauron. We feed him malevolent energy from our spirits. But either way, it's returning us the Owens and Minor. Looks like we got a bit of a call. I wouldn't call it a palooza, a call light dusting out there. Owens and Minor Inc. This is a newcomer to the odd block. This is a healthcare logistics company. So there you go. That's about as sexy as it sounds. Trading 37.28 right now. The ticker symbol OMI, Owens and Minor. This is the name that over the course of the past year has had an interesting run a year ago. So coming off the great nadir of the market, was trading 568. It's a wee bit less than where it is right now, listeners. Then it kind of hover around that level, got up to about $8 in July. So it had a decent comeback, but then it just shot up from about $8 in July 20th to about, by August 3rd, it was trading 17.01. So it more than doubled in that short span. So obviously maybe a good pop of earnings, whatever it was, things just looking good. But then they kind of trended back down again, got down to about 13.79 by September 23rd. This chart almost looks like a biotech because it has these huge fits and starts. And then it shoots up again from 13.79, shoots up all the way to 27.30. So again, pretty much more than doubling. That was by October 8th. So in a couple of weeks, again, it has more than doubled again. And then it kind of gently drifts down again to about 22.5, gives a good chunk of it back, and then starts slowly rebounding again until that's about $25 till December 8th. And it goes from 25 up to $30 on December 23rd. And it kind of hovers in that range again. Then has another gap up, sells back down, hovering around $25 on February 22nd, goes from $25 up to $34.01 in the span of, looks like 2 sessions. So this thing is gappy for a healthcare logistics company. And it's kind of been vacillating around that level right now to where we find ourselves today, 37.30, giving up a little bit of that, giving up about 12 cents out there. So what has our Eye of Sauron found in this surprisingly gappy, surprisingly volatile healthcare logistics company? Looks like some of Mr. Rock Lobster may be taking some of that vol and putting it to work in their own pocket. We got the May 42 halves going up an even 5,000 times for $1.45. That was the bid, so they hit it. They were $1.45 at $1.95. Pretty wide market, but again, it's Owens and Minor. It's not Apple, right? So they took that bid and they got all they could out of it, which was 5,000. They squeezed that sponge and wrung out as much vol as they could. If you're wondering, that was a 66.5 vol. That's a pretty hefty vol for a healthcare logistics company. Again, keep in mind, Bitcoin, the name that is synonymous with vol, is trading in the low 70s right now from a vol perspective. So this is only a few points lower than Bitcoin, and it's a healthcare logistics company. But then again, look at this chart. Kind of hard to argue that it isn't warranted out here. There are earnings. Let's see. They're on May 5th. So there are earnings baked into this as well. The stock was decently lower, actually, when they sold these. It was 36.83. So this thing has obviously moved a little bit since this morning. So interesting stuff. Mr. Rock Lobster looks like someone writing it off here to the upside, saying, I'll sell my stock at 42.5. Again, looking at this chart, it's kind of hard to argue. The 52-week high is 39.5, so they're getting $3 more plus $1.50 almost on top of it to boot, as the Canadians would say. What are your thoughts on what appears to be a earnings call over right here in everyone's favorite newcomer, Owens and Minor?
Actually, I was looking at some of these healthcare type companies this morning. A lot of them have gotten kind of beat down. This one is doing quite a bit better, it looks like, than the average bear. And this is, I think, one of those other kind of value play stocks. So I don't know what the deal is with it or why it's so hot, but I think that's pretty good premium if you want to be an overwriter. Certainly not that bad at all. So the stock kind of trades in fits and starts. I mean, it was an $8 stock in May. So it is. I would call it Owens and Major at this point. It's becoming a big company. But the override looks, at the rate the revenues are growing, holy guacamole! This thing could be a runner. So interesting. An interesting company, and but yeah, it looks like just a kind of a good old fashioned buy right. But I'm not quite sure what's going on with this stock overall, because it seems to make money but doesn't go anywhere. So
stock is nuts.
Really, yeah.
Stock sits, then it doubles, and then it sits, and then it doubles again. Then it gives some of it back, and then it doubles again. So we could be well through this 42 half strike by earnings. I do like this trade, though. I think this is one I can see what this guy's putting down. Take your 66.5 vol and take your multiple points of upside here. And you probably already had some stock. You're already sitting on a pretty good game, probably. So take a little more, get the heck out of Dodge, live to fight another day, perhaps on a nice private island of your own choosing. We'll come back to this one. I got a feeling this guy's probably going to do all right. But then again, we got earnings coming up, and this name has shown itself to be effectively a biotech. So we'll keep one of these meme stocks now. We'll keep an eye on this bad boy. Let's move on to a little bit more of an older school type of name. This is Baker Hughes. I don't think we talked about them in the odd block in a while, though. Ticker symbol Baker, BKR, trading right now $20.75. Of course, they're out there in all the fun oil and gas land. They're off about 68 cents today, or about a little over 3, almost 3.2%. This is another name that's kind of had a topsy-turvy year, kind of following the oil market out there. A year ago, it was trading $12.86, so a wee bit shy of where it is right now. Then it rallied all the way up to not that far from where it is right now, $19.06, so almost $2 shy, about $1.75 shy of where it is right now. On everyone's favorite day last year, June 8th. I still have to go look into the analysis and see what it was about June 8th that made it the near-term apex for almost the entirety of the market outside of the FANG names. Almost everything we looked at all peaked at June 8th of last year. And then it sold off right back down to the 1431 by June 24th. It kind of hovered in that range for quite a while, actually. By October 16th, it was still trading actually a little bit below that, 1314. Then it started pulling a Owens and Minor. Not quite as aggressive, but it started turning around again. And by November 3rd, it was trading 1588, almost 16. By a little bit later in November 17th, trading 19.25. By December 10th, it was trading 2312. So it rallied about 10 handles. It was trading $13 October 20th. By December 10th, it was trading 2310 or so, 2312. So a good run for them. Obviously, they couldn't keep it up because they're not there right now. But they sold off again down to $21 in January, then right back up again to it's like about 23, almost 24 and change by January 15th. Then they sold off again to 2030. So we saw some fits and starts in the energy market during that time. Then it rally-hoed again, got up to 25.15 on February 24th. And ever since then, it's kind of been a steady move back to the downside, giving up almost $5 of that. So they were 25.15, and now coming into today, they're at 20.73. So you're talking 4.30 or so they've lost in this name in not that long here. So again, a pretty volatile name. Not quite a Owens and Minor, but then again, what is? Even though the vol here is pretty juicy, what do we find out here today? Our Eye of Sauron fixing itself upon some of the puts, the July 19 puts. So these are $1.73 out of the money right now, going up for 102.5 cents. So maybe getting some splits there. I'll have to go look and see if there's another leg to this, but it was a little bit off the offer. The offer is at 105. There were 90 cents at 105. So actually a decently tight market for a fairly illiquid name. Again, doing 4,500 for $1.02.5. Looks like paper buying these, paying 42.2 vol out there. So juicy, but it's no Owens and Minor out there. It's no almost Bitcoin approximate vol out there. Let's see. Earnings are on April 21st. So there's definitely going to be earnings baked into this put. It goes all the way out to July. So you can probably figure that. And the stock was at 20.68 when it did this. So whopping 4 cents lower. So Mr. Rock Lobster, looks like we got someone out here maybe deciding, you know what, this thing's kind of topsy-turvy, has some fits and starts, and in case it has another fit to the downside, I don't want to be in it, so I'm going to pay $1.02.5 for nearly 5,000 of the July 19 puts. What say you, sir? I know you like your line in the sand put. Do you like your gobbling up put through earnings really even more, sir?
Well, this is the oil fields, that sector got kind of brutalized and then came back. So when you think about it, I'm looking at, you know what, they used to be BHI for years, right? Baker Hughes, now BKR. What does it be? Yeah, like, why they changed the symbol? I hate that. And isn't this a spin out from GE? I can never keep track of all the things that GE has bought and sold.
If it's something good, chances are GE got rid of it, right?
Yeah. They've unwound so many businesses from there. Anyway, it's hard to keep track of all of them. But this is one of those, kind of a value play stock. All the rest of it has a lot of cash, but suffering because everybody stopped drilling. And you know what's going to happen usually, right? They stop drilling and then there's a backlog. So it's an interesting put. I don't really think, though, this was a line in the sand put in this one.
No, they bought these bad boys.
Huh?
They bought these bad boys.
Yeah. I don't. So, are you liking buying the July 19 put? I mean, the only thing I could think of is it's a very inexpensive put. It would be an interesting thing to back spread out to July, right? You could buy puts and stock on a ratio. Looking for a little bit of upside in here. I think the recent high was about 25 or 26 bucks. So I think from a vol point of view, I don't think they're that expensive. So I think it's a reasonably priced put. But just buying the straight puts and kind of fading the energy sector, I don't know if that's my favorite trade at this point, because I think there's going to be just a backlog of activity from all the offline production. I don't know if it's not a stock I would be interested in shorting at this level, to be honest. So can't say I love just the straight put buy.
I knew you wouldn't like it. I was setting you up. I figured you'd be much more demonstrative in your lack of love for it, but we got more of a middling lack of love from the Rock Lobster. But hey, you never know what you're going to get with the Rock Lobster. We'll keep an eye on this one, maybe. I don't know. Maybe we have so many other trades to watch. I don't know. Maybe we won't keep a tentative eye on this one. I got a feeling this one's probably not going to pay off, but we shall see. We shall see as we keep on going. Speaking of paying things off, I said our catalog overfloweth. Every time we take one out, we add two more. But let's go back now, all the way back to the Rayback Machine listeners. Set it to November 23rd. So the heady days of 2020. Who can remember that far back? But at the time, we profiled a massive put palooza in BGC partners. We were joking that looks like a senior partner might be a little bit spooked. Maybe they're heading for the exits or worried about some downsides. At the time, this was not exactly an expensive name. The stock was trading $3.81, ticker symbol BGCP, listeners. Someone came in and gobbled up a whopping 100,000. So you're not talking a insignificant portion of the outstanding float of the stock. 100,000 of the three puts in February for 20 cents. It was a whopping 77 vol that they paid for these things. There were no bid at 35. It doesn't seem like they found a 20-cent bid to sell. So we pretty much figured that they were buying these bad boys. Stock was $3.81 when they went up. And there were earnings covered by this. Earnings were on February 4th. So it seems like someone, significant holder of BGC Partners, was not liking the prospects for February earnings. So let's see how this bad boy played out. By the way, there were 316 million shares outstanding. So by doing this, they were hedging approximately 3% of the outstanding float of the stock. It was a lot of shares that they were covering here. So 100,000 lots. Don't see too many of those in these single names these days. So we'll see how this trade performed. Let's go on out here. So yeah, they put on 100,000 and they took them off partially. They took off about 20,000 of that 100,000 a month later on December 21st for about a dime. So they took a bath on about 10 cents on that 20,000 lot. So obviously they lost a couple $100,000 there, but they still had 80,000 contracts on this position. And then the stock closed at $4.81 on February expiration. So actually exactly $1 north of where it was when they put this trade on. And 80,000, the remaining 80,000 of those puts were still on at expiration. So those went the way of the dodo. So he added all up, paper dropping 1.8 million on these puts out here. But on the flip side, you got to assume this person probably holds themselves a little bit of BGCP stock. And to the tune of that amount that they hold, about 10 million shares, they made $1. So they're sitting on $10 million on the stock. So even though they wasted about $2 million of it hedging that bad boy, not exactly a cry me a river type scenario here at the end of the day, because they're still up about $8 million on the trade. Mr. Rock Lobster, is that your takeaway as well on this massive put palooza? It seems like it was unwarranted here in BGCP partners.
This is when you were looking at this, did you see this as I still was like a little ambivalent about put purchase or sale. Like you guys had that, Henry had this marked as a put sale, a put purchase. I was looking at this like, because it is in the middle of the market and it was a little bit not totally clear when I was looking at this. It was, again, 20 cents. I'm going to guess that was a purchase.
I don't think they found a 20-cent bid to hit 100,000. Maybe it's possible. They could have the best broker going out there. I love when they show me no bid. That just drives me crazy. But 20 cents would be an aggressive bid.
The only thing I could think of is, did they close enough of these puts in time? Because I'm looking at it, I don't see how they could have closed these for anything, But if they were long stock and they did it like that, I mean, they could make some money. But it again, kind of cheap gamma for 20 cents, right? On that, because you like trade three. I'm looking at 350. Like there was an opportunity for a little trading in there. Oh, this is a kind of just an odd one. Like not. I mean, whoever sold the puts made money, and if you bought the puts, you would have had to buy a bunch of stock because there's just no way you're making money unless you did. So, I would just say it was interesting for the size.
Yeah, the size is what made it stand out. And you're right. If they were deft and they did some good, nice gamma scalps on it, it's one of these trades where everyone could have won if you did it deftly. That's why I hate people saying options are a zero-sum game, because you have no idea what they're doing in the background to hedge it. And that can make every trade a winner, every trade a loser. So the notion that options are this complete net zero-sum game is an absurd fallacy. But that's a conversation for another day. But yeah, this one, you're right. They could have sold it. They could have found a 20-cent bid out there, pretty aggressive, but they could have. We kind of played it the other way. It looks like they probably bought them, and they took some off for a dime. Again, only 20,000 though. They kept their other 80,000 on. So the whole thing was kind of done kind of interestingly, kind of weird. And it seems like they were worried about a very near-term sell-off here in BGC. They had already lost. Again, talking about these things have to happen in a fairly quick amount of time for these trades to pay off when you're buying premium. They took them off, part of them a month later. They had already lost half of their money. So this thing was only December. These puts went out in February, and they already were down to a dime. So, again, that's why we say when you're buying premium listeners, things got to happen pretty quickly. Otherwise, the decay monster is a beast. You know what's not a beast, though, are your questions. So let's get to them. It's Thursday, mail block time.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Let's start paying off our massive tourney because we're down to 2 listeners. And then there were 2. The championship battle, the heavyweight slugfest is going down here. And we have some surprise participants in our championship tourney. A lot of people put heavy money on the Schwab TD Ameritrade Leviathan to go all the way, and they were looking pretty good. They wiped off Tradier in the first round. They took out fan favorite Tastyworks in the second round, wiped the floor with them. They were a previous winner out there as well. Looks like they were set to advance into the final 2, actually, the championship match. They got to the final 4, and they met up with the little engine that could, known as Lightspeed. Lightspeed did what Tradier and Tastyworks couldn't. It toppled the juggernaut of TD Ameritrade / Charles Schwab. Lightspeed moving on into our championship. We were getting a fair amount of positive Lightspeed feedback in the comments there. So it seemed like they have their following. Again, if you're outside the option space, you may have never even heard of Lightspeed. But if you're in the wheelhouse, in the bubble there, you clearly know what Lightspeed is, and you clearly like them because you're voting for them out there over other names like Tasty and Schwab and a bunch of other names. They actually, Lightspeed beat Robinhood in the first round. That was an upset there. Everyone thought Robinhood might at least advance. And they took out Merrill Edge, kind of a easier one in the second round there. And again, took out the juggernaut of Schwab. And so Lightspeed has had the toughest road to the championship here. And they are competing against, get this, E-Trade. E-Trade / Morgan Stanley advancing all the way to the championship match. They triumphed over Trading Block in the first round. They triumphed over Ally Invest, the former GE Financial, a.k.a. the folks over there on our Options Playbook Radio. So Brian and his team, they triumphed over them. And then they took out TradeStation in the last round. They seemed like they were going to get a little engine that could out there as well, but they took them out. And now we have E-Trade versus Lightspeed. If you had asked me to pick our final two, I would not have picked these names, which makes it fun. That's why we do this tournament. It seemed like the momentum was squarely behind the juggernaut, and maybe we would see, maybe, who knows, maybe a TradeStation, maybe a Fidelity on the other end, but I didn't think E-Trade would make it, but they did. So there we go, listeners. E-Trade versus Lightspeed is your final battle. By the way, you folks have been taking advantage of our survey, been voting in droves. Thanks to all of you who have played. It's really been fantastic. And hey, it's good for you too. Every time you vote and register at the end, you register to win fabulous prizes. So if you vote in every round, you get a chance to win every round. They're all entered into the hat at the end for the fabulous prize drawing out there. So the more rounds you vote in and register in, the more chances you have to win the fabulous prizes. You have one more chance here. It's the final battle. By the way, a lot of you have also been taking advantage of our feedback in this tournament here. Let's just look at a couple of them here. We've got, we'll keep names off them because a lot of people ask to be anonymous. Tasty Trade user says his favorite feature of the platform is his easy construction of strategies. But he also says his least favorite element of their platform are their charts. Not a fan of the Tasty charts. Interesting. Another person chiming in, also a Tasty user, saying he likes the platform ease of use. So ease of use seems to be a recurring theme with a lot of Tasty users. And his least favorite thing are the options chains. We've heard more than a few people complain about Tasty's options chains. What's wrong with the chains? They're the most basic thing on the planet. How do you get an options chain wrong? I'll have to go play around with Tasty's chain, see what they're doing wrong out there. But either way, a lot of you not liking the chains on Tasty for whatever reason. A IB user saying his favorite factor is that it's cheap. Hard to argue with you. IB, known for its aggressive pricing out there. His least favorite element of IB are their data drops. So I'm not sure if he's talking about data missing from the platform, if he's doing scans, or if it's cutting out during his trading day, whatever that means. I'm not sure, but data drops. It sounds kind of ominous. We got a TD/TOS user out there saying he loves all the shiny bells and whistles of the platform. Yeah, they have a lot of them. TOS is, shall we say, one of the more feature-rich. Others might say jam-packed or cluttered, but and that actually is your least favorite thing about it. You love all the bells and whistles, but you don't like the fact that the platform is very cluttered. Yeah, if you're new to options, TOS can almost be a little bit too much. It's a little bit overwhelming. You look at it, like, oh my God, where do I start? So I could see how that could be a little intimidating to the new user. And we got a Fidelity user here saying he loves the Active Trader Pro. Active Trader Pro is a very capable platform, but doesn't like that stop losses are only available on calls and puts, not on spreads. I think I've seen this. I think this guy's voted in other rounds. There you go. Some of your feedback here. We also got some live listeners here. NDIF listening live saying he sees E-Trades in the final battle. He says customer service at E-Trade is awful. I want to like them, but the lack of follow through and inability to contact in a timely manner has me considering transferring. Interesting stuff. Mr. Rock Lobster, are you surprised by our final two? Or is this who you expected? Did you expect Lightspeed and Morgan Stanley E-Trade to make it into our final two, sir?
I mean, I still think Lightspeed is probably one of the better trading platforms for serious option trader because of all the vol features and all the, the good analytic functionality. And I know a lot of the guys there, they're really good. They're all staffed with like ex-market makers. Company, was started by guys that I know on the P Coast, years, oh my God, 2006. So it's an excellent platform. That doesn't surprise. And I know isn't E-Trade now coming from, I believe, Peak Six buy them or something like that, or then Morgan Stanley, I guess, bought them since then. So not quite sure how it all went out, but I do know I hear this customer service is picking up there though. So although E-Trade is not my favorite because I just don't like their execution platform. I've got some clients that use it. I don't think it's really built around option trading. I think it's built around, I need to sell like one put every month, and it works for that. So I'm surprised that E-Trade actually so high up on the list.
Yeah, they fought their way through. Uncle Mike, any surprises from you, either from the so far the winners of our tourney or the results or any of the feedback, sir?
No, can't say there's any surprises on the feedback, but E-Trade is a surprise to me. They are not a very option type of place typically. I know that just on the institutional side of it, I know that they don't, for independent guys like me that broker their trades through brokers, they do not offer options on the institutional side of it for independents. So kind of surprised because they're not option people typically.
Yeah, I was surprised that E-Trade has done as well as it has. When I saw it kind of picking up in our battle a little bit earlier, I started playing around with their platform a little bit more. I hadn't kind of played with it in a little while. And you're right, the core legacy E-Trade platform, don't use it. It's terrible for options. The link to options chains on the main E-Trade brokerage site is actually broken. It gives you a 404. You cannot do it. But you have to go through the watch list. It's atrocious. Clearly, options are not their focus. But I will say this. Digging a little bit deeper, I think I can see where some of these votes are coming from because they have the old Options House platform, which they now call Power E-Trade. You can get to it if you navigate through this crazy labyrinthine system of links. You can use that platform instead. And that looks like they just took LiveVol and hit copy and paste. It's like a mini LiveVol. It has all the great same chains, same layout, same design. That's a great platform. So I've been pleasantly surprised with the Power E-Trade, and I think that's where a lot of these votes are coming from. So I think they took the old Options House. I remember the Options House guys, they have a Peak 6 legacy. They spent a lot of money. They were very proud of their platform right before it got gobbled up by E-Trade. So I'm glad to see that platform still exists. It's still being utilized. If you're an E-Trade customer, you can't even find the regular chains. Go use the E-Trade, Power E-Trade platform. It's a much better platform. I haven't had a chance to try out their customer service, so I can't speak to that. But yeah, I do like what I'm seeing on this. So that kind of reaffirms why so many folks are voting for them, I think, in our tourney. It's a little engine that could, even though they're part of a big juggernaut now, which the parent company maybe doesn't care that much about options, but there was a legacy core in there that really did. So check that out. We got other people chiming in. We got Powder Skier from the live chat. When we're talking about the Chinese Bitcoin miner in the odd block, he says, Peter Thiel calls Bitcoin, quote, a Chinese financial weapon at a virtual roundtable. So maybe that's driving some of the paper out there in that name. I believe it was SOS. And I don't think we have time to hit on these. These are some very detailed questions here. Some of these questions are a little scary, actually. I will just say we're starting to get a lot of questions from people. And again, we love the newcomers. We love to see so many new people are discovering options. But there's an alarming lack of understanding of the options product. And people are writing into us saying, hey, I bought the option on X. What does that mean? What should it happen? Where does that do? What is these are things you should probably understand before you kind of dive into the options market. So I think we'll get into some more of these questions next week and stuff because there's a lot of them out there. But this is a little bit alarming. I don't want to name names either because I don't want to make people feel bad, but yeah, hopefully if you're in that category, if you're writing to us saying, I bought the X option or the Y option on this name, you need to check out the strategy block segment of this show, obviously, but also go check out our options bootcamp, options playbook radio shows. There's hundreds of episodes of each. It's all free. Go mainline it. It costs you nothing, and it will save you an immeasurable amount of money that you're going to lose on some of these trades that you clearly are getting in a little bit over your head. So if that sounds like you, again, we don't say this to be mean. We want to help you. We want you folks to be longtime listeners of the shows and traders of options. And in order to do that, you need to educate yourself. So get started there. It costs you nothing. You can do it on your own time. And hopefully these questions will be a little bit more nuanced there. Again, we love you all, but some of these questions a little bit concerning. All right. Unfortunately, we ran out of time here, listeners, so we're going to do a combo around the block as well as a little bit of a plug block, what they have cooking here as well. By the way, if you need more in your ear holes, don't worry. I'm back in exactly half an hour with This Week in Futures Options. Break down a lot of awesome stuff. Got Matt Amberson joining me on that one to help me do a lot of fun stuff. So he'll go deep into skew and a bunch of other fun stuff. So stay tuned for that. We'll pump some great content into the live stream. Be back in exactly half an hour with that show. But before we go, let's go back around the horn. Uncle Mike, we'll start with you, sir. If folks are intrigued, they want to kick the tires and light the fires in the land of St. Charles, where should they go? What should they do?
Well, in terms of what I'm watching, before we even get into that, watching to see if the 10-year can make some highs and touch some levels of which it hasn't touched in almost a month. In almost 2 weeks. Watching that, as well as the 4100 level of SPX. And then if you want to learn more about what I do, you can follow me on Twitter at Mike TOSAW, TOSAW. And feel free to visit my website, stcharleswealth.com, if you're looking for a financial advisor who is not afraid of the option product.
He ain't afraid of no options. Give him a follow on Twitter as well, at Mike TOSAW, TOSAW. Join the legion that are flocking to his banner on Twitter. And let's go around the horn. Mr. Rock Lobster, sounds like a lot of folks are seeking out education over in your neck of the woods, too. If they want to find some, where should they go? What should they do?
I almost forgot how to do this.
I was going to say, I thought you said you mastered the mute button at the top of the show.
You know what? I mastered the mute button at the top of the show, but not at the bottom of the show. Go check out Option Pit. Our trading products are doing like our vol trading products. Mark's killing it. My vol trading club this year, killing it. Sharp Bets, killing it. So, you want to learn how to trade, trade while you're going, get some education, understand how all these option things work. Just don't YOLO everything all the time and have no money left in your account. Come on over to optionpit.com and get your learning on.
Get your learning on optionpit.com. So I got more votes in the chat here for Power E-Trade. So yeah, folks are liking that platform. So clearly that one's resonating. So if you can find it buried in their platform, you can't even get to the chains. I love that. That terrifies me. That didn't give me confidence. But if you can find the Power E-Trade, it's actually a pretty cool plan. We'll see how this voting shapes out. The little engine that could, Lightspeed versus the juggernaut of E-Trade. We shall see who triumphs. You folks determine it. Get on over there at Options. Click on that survey link. Get in there and fight while the fighting is going on. And, of course, register to win fabulous prizes. And we're back again on Monday with another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.